What's up guys, in today's video I'll be showing you everything that you need to know about order blocks in the market, starting from the definition of order blocks in the market, how to trade order blocks, and my own strategy on how to trade these order blocks in the market, how to identify these order blocks so that whenever you see it in the market, you get to know what you're doing and get to do the right things in the right time. I know you might have watched a lot of videos about this order block already, but trust me on this, you're going to learn this in a very easy way and you get to understand it so that whenever you see opportunities to trade order blocks in the market, you don't get to lose money on those opportunities, but you get to spot it the right way and get to do the right things and make money from it also. And if you're new to the channel, you just came across my video today, my name is Philip Joshua, and on this channel I teach people on how to trade the financial market, how to trade the forex market from the beginners level to the advanced level. You can go back to the videos that I've made before so you can get to understand some things about the market and get to watch them and get to learn more about the forex market in case you need any other thing to learn apart from this order block in the market, guys. So let's get into our topic for today. Let's not waste paper time again. So if you don't know what is an order block in the market, an order block is a candle before an impulsive move in the market that breaks structures and leaving behind an imbalance in the market. So that imbalance now is what we get back to and get our retest around. Then from there we confirm that that area is a strong order block area in the market. And also order block areas are areas whereby institutional traders get to take their trades around there, and from there they get their entries and keep holding the trade till the market break the former structure, and from there they take their profit around that area also. So let's get into the chart. Let me show you how to identify order blocks in the market and also how to trade the order blocks using my own order block strategy in the market, so that from there you can get to understand on how these things works in the market and also have a strategy that you can back up with and trade with. Then from there you can get to make money trading these order blocks in the market also. So let's get into the chart. Let's not waste much of our time again. Alright, so this is how the order block looks like in the market, and after explaining the structures for you, I will get to explain it on the chart for you also, so you can get to understand how these things looks like in the chart and get to know what you do whenever you see the structures in the market also, because you have to know the structure first before you can identify what is going to happen in the chart next. So around this place now, if the order block is coming from a selling point in the market, which is a bearish market, we expect that we get a resistance point around that place, and we get an area whereby the market just come and get a retest around. And when the market comes around that place and get a retest around that resistance point, we get candles like pin bars around that place. Sometimes we get fair value gap candles around that place. Then from there the market will now come break this former structure. So after the market has broken this place whereby we got a breakout structure around this side, then from this side we expect that the market to from there get to this point, confirming that this is an order block area in the market, and the gap between this place and this place is called an imbalance in the market, because this is an area whereby we expect the market to get a retest around. Then from there we can now get what we call order block in the market. Then from there the market will now start dropping toward the downside, because this is the place whereby the institutional traders are interested in taking their entries in the market, and we should also be expecting that place to be our area whereby we'll be expecting the market to push from. And sometimes around these order blocks, whenever the market is dropping again, we get some kind of mini order blocks in the market, confirming that the market is not going to break this main order block in the market. Then from there we get a break of structure around this place again, confirming that this structure has been broken, and we expect a retest around this side to confirm that this one is also a strong one in the market. So when we get a retest around our mini order blocks in the market, just know that from there the market is not expected to start going toward the upside again. And this gap around this place also is called the imbalance in the market. So we expect the market to come and gain its balance around this place. Then from this order block point, the market will now start pushing toward the downside. So that's how the order block looks like in the market. That's the structure of the order block. Let's get to the chart. Let's get to explain it in a better way. Alright, so this is how we get order blocks in the market. So around this place where we have a strong resistance point in the market, which is this side in the market. This is where we got our first resistance point in the market. So we expect that the market shouldn't break that place and go toward the upside again, due to the fact that we have our rally based drop in this side, and we got a retest around that side. So right now we expect the market should come and get a retest around this place, which the market did something that if you don't get to understand it, you keep expecting that the market should get to this place. So around this side now, instead of the market to get to this place, we got a fair value gap candle around this side. So this fair value gap candle now is going to push the market towards the downside, and someone that doesn't understand it will keep waiting till the market gets to this place, which is not going to happen again, except the market has to come back and break that place and start going towards the upside. So around that side now, we expect our order block around that place. So we're going to bring out our rectangular bars in the market, which is this in the market. Then we're going to place it around that side. So around this place where the market came and gave us a fair value gap candle in that place, we expect that area to be our order block area in the market. So looking at what happened in the market right now, you can see that the market came around that place, and from there the market started dropping toward the downside. And this is the place where we got the order block itself, because this place is just like an area where we got a proper confirmation that this resistance point was not going to hold the trade for us anymore. So around this place now where we got this proper confirmation, we expect that from that place we get our order block around. So looking at this place now, you can see this pin bar around this place, you can see this rejection candles around this place, and these are signs of order blocks in the market. So we're going to bring out another rectangular box and place it another place, because we expect the market to start falling from there to the downside right now. So on this side now we have a new rectangular box in the market, and we expect the market to come and get a retest around that place. Then from there the market to start dropping towards the downside. But one thing you must take note of is whenever other blocks want to form in the market, it doesn't form immediately. So around this side now you can see that if I use this thing that looks like cross in the market, from this place the market came and broke these former structures first. So after the market broke this former structure in the market came and got a retest. It did not just happen all of a sudden. Let me place my horizontal line on that place. This structure in the market got broken. This one like this got broken in the market. Then from there the market came and got this retest around this place. So around this side whereby the market broke that structure with these candles in this place is the area whereby we'll get our retest towards this side. And this structure that was broken around this place is our breakout structure in the market. So looking at this side now, let me show you something. So when the market came around that place, the market came and got a retest towards the zone whereby we expect the market to get our orders from, which is our order block area in the market. If the market came, broke this former structure and gave us a retest around this place, this could have been a very fast order block area in the market. But since the market wasn't able to break it and give us a retest around that place, this becomes an area of imbalance in the market. And what do we expect in other blocks? Other blocks are expected to come and balance areas so that we have imbalances in the market. So around this side now, we expect that the market should come and get a retest around that place. Then from there the market start dropping. And if at all the market went and broke this former structure in this place, the market is expected to change its movement to an uptrend, because this place is the major structure, which is the major resistance point that is holding this trade. And we expect that from here the market to now start dropping towards the downside. So look at what happened right now. When the market came around this pin bar in this place, this zone around the side, the market just came and got a retest around that place. Then from there the market even got another retest another side, confirming that this is going to drop towards the downside. So this side whereby the market wasn't able to break, we expect that the market will still drop towards the downside. And the market dropped from there towards the downside. But something happened around this place again, which is the fact that we got another mini order block around this place. And before we got this mini order block around this side, which is this side of the market came and still broke this former structure in this side. So this new structure now got broken, and from there we got another mini order block, which I'm still going to mark out for you so you can get to understand this also. So around that side now, we got a mini order block in the market. And what do we expect again? We expect that from there the market will come and get a retest. Then from there the market will start dropping towards the downside. Looking at this place now, the market broke this former structure, came and got a retest around this side. Then from there the market started dropping towards the downside again. And around this side also is another order block area in the market. If you look at this place, you can see a lot of rejections in the market also. And we expect that from there the market will still come and get a retest around there. Then from there the market will start dropping toward the downside also. So look at what happened. This is another rectangular box in the market, and the market came around that place and got a retest. Then from there the market started dropping properly towards the downside. So this market came and gave us 3 strong confirmation that this other block area is still going to hold in the market, and the market is going to go towards the downside. And whenever we want to take these other blocks in the market, like we want to trade it in the market, these are areas whereby we expect our take profit to be around. This place whereby I'm going to place my horizontal line right now, which is the last structure around this place. That's the area whereby we expect our take profit to be around. If we are to take our trade from this place now, which is this area, towards this side, the risk to reward ratio is very, very good. And if we are to take our trade from this place towards this side, the risk to reward ratio is very, very good. And if we are to take our trade again from this side towards this side, the risk to reward ratio is not that bad. So whenever we want to trade other blocks in the market, we use this area whereby we expect the market not to break again. We use those places as our stop loss areas in the market, because we know that if the market breaks that area, the market is invalid around that place again, and that other block is not strong enough to take the market toward the downside. And looking at this place also, if we got our trade around this place and we got this retest around this side, Expect that this place whereby we have our wick around this place should be our area whereby we expect our stop loss to be around, and this place still remains our take profit area in the market. Because whenever we have order blocks in the market, we expect the market to break the former structure, then give us new structures in the market also. Looking at this place now, you can see that if we were to enter a trade around this place also, which is this side of the market, we will expect that we'll take our entries around this place and we'll place our stop loss around this area, which is this place where we have our wick in the market. Because around that place, if the market was to break that place, we expect that from there the market will keep pushing towards the upside. But since the market wasn't able to break that place, which is this area and this place, this zone around this place, we expect that from there we just place our stop loss above that area. Then if the market kept going towards the downside, we will always expect this place, which is our last structure in the market, to be our take profit area. And from there you can see what the market did. The market came, got a retest around that place, and still got to broke this area in the market. And looking at the other mini order blocks in the market, you can see how those ones form the market also, and from there the market continue pushing towards the downside. So that's one thing about it, and if you get to understand it very well, you get to make a lot of figures for yourself also. So that's how the order blocks works in the market. Let's get back to the video. Let's get to conclude it. At this point, I believe you have got to learn a lot of things about these order blocks in the market, and if there's any side that you got confused around, all you just have to do is get to watch the video over and over again, or download the video and keep it for yourself so you can get to watch it over and over again, so you can get to understand how this thing works in the market and get to study it in such a way that you get to understand it faster for yourself. Because this is an educational content and sometimes it might not enter your brain the first time, but when you get to watch it over and over again, it gets to stick into your brain. So that's all about today's video, and if you're new to the channel, don't forget to do what? Hit that subscribe button, don't forget to like the video, and don't forget to share it with your trading friends so that from there they can get to watch these things and get to learn on how these things works in the market also. See you on the next one. Peace and love, guys.